And you and I, we've worked on multiple transactions together. And, one of the things that I'm thinking of is, you have some buyers that might be a year out, but they still want to have an idea of what do they need to do to get that particular home. So, that's something that I think we work very well with, because we can do a baseline pre-approval, let them know specifically, okay, I've gone through your income, I've looked at your assets, and provided that your financial situation doesn't change, it stays pretty, stasis, right? So it's stable. This is what you can expect. But something that I'm adding now is stress testing that against rising interest rates.
Right. Because
we don't know what's going to happen, right? Rates could be much, much, much higher, right? And that actually brings me to, new construction. Right. So, we're going to talk about this when Karen joins us, Karen, my wife. And, so when we were building in 2020, it was a normal build schedule, right? We didn't have the craziness of, and this is our big, beautiful home, by the way. So Caroline helped us get, which we're very excited about. But in 2020, we had a normal construction schedule. But I'm hearing, and I'm seeing it from my own clients and our clients, that there's delay after delay after delay. And if you're building a home and you're locked into a contract and the builder won't actually lock in your rate, I mean, what could you do, right? I mean, I'm sure that you're hearing this, right?
Absolutely.
So, one of the strategies that we employed with one of our clients together is we did an extended rate lock, right? So what it allows us to do is lock in the rate. So here's the process. I'll break it down. So Caroline has a buyer. She introduced her to me. We went through. You got under contract. As soon as we're under contract, we send the file immediately through underwriting, right? So once it's in underwriter, they give their conditional loan approval, and I go over that with the buyer, let them know, okay, here are things we need to work on, and your home's going to be completed. I think originally it was supposed to be like March, right?
That is correct. Surprise, plot twist, it's now May or June.
May or June, right? So now, how can you... you're trying to establish a budget, but you also have to, have concerns about debt to income ratios and, not having to pay more. And if rates just keep going up, the builders, they'll probably, they have the in-house lenders, and they're going to lock anywhere between like 30 days, right? Maybe 60.
Right.
But they're going to make sure that home is actually on its final stages before they lock that rate, because it costs them money. Right? So what we're going to do on our side is we're going to send them through underwriting, and then we're going to get a good barometer of when is that home going to be completed, give a nice big buffer, and then we're going to do an extended rate lock. Right? So we have refundable options, we have non-refundable options. So you pay for it, right? It's not free, right? But you can lock up to a year in advance, right? So if you have someone where they just started and the track record is that the homes are going to be completed in 6 months, 9 months, but they haven't had anyone go past 9 months.
Right.
A year is a pretty good, and then you also have another 60 days that you have as an emergency that you can extend it to protect that rate. But what it allows you to do is it allows you to lock that in at the various days that you need to have that protection, and then if rates go down, you have a one-time flip down. Right? So if, God forbid, something absolutely horrible happens and interest rates just drop down to the ground, we have that option to seize on that particular opportunity. So it's another quiver that we have in our arsenal that we're able to help our clients with.
Absolutely. And I think it's really interesting. I mean, I work with all lenders and all different companies. You are really one of the very first that I've ever encountered and have been friends with professionally, personally, that has had that option. Mm-hmm. And it's really amazing that more lenders don't have that option or aren't offering that up, especially with this type of market that we're having and the ebbs and flows of materials and delays and freight getting here late, etc. So it's really, really helpful, especially in the instance of this client that we're working with together. With the delay that we found out about yesterday.
Right.
So It is. It's a really nice safeguard and protects and helps and benefits the buyer of the home.
Yeah, and I mean, it just aligns with what's happening with the market. I mean, I've been with Guaranteed Rate for 6 years, and we've had that product every single year. I've never used it except this year,
Sure.
and now
Yeah.
it's coming up on new construction all the time.
For sure.
And it's just, it's great to, have that relationship with the company that I work with, that they, their goal in this market isn't to, contract because rates are going up and just get really lean. It's actually to take market share and to help our agents as well as help our buyers, right? Because that's an opportunity where we can do more and more business, and it's just very, it's forward thinking.
Totally. I agree. And we're thankful that we have you to help with that.
Oh, I appreciate it.
And to make those adjustments to get us to our new date.
Exactly.